All right, guys, what we're going to do here is kind of a recap, but in the last half hour, some analysis as we're moving. Right now, it's 225 Central. We're trading around 29.30 even in the S&P March contract. Now, we're down almost 100 points, and we opened up 14. So we're down 115 points, essentially, from where we opened today. And the fact that there were some things that were interesting on this sell-off. First of all, and I did a YouTube video at around 10:30 Central about when you have lower prices like we did Friday into Monday into today, and you still can't find a bounce and time is going by, it's like anytime anybody with any product or service lowers price and they can't find buyers, they're going to have to lower price more. It's exactly what the markets had to do. So we said this yesterday, and we said it again today, mid-morning, that you're running out of time for this market to have a great bounce before some more additional downside and more additional downside. Now, we were trading around 3,200 even mid-morning today, and we're down almost 70 points just from that level. You cannot sit there. And the analogy I use is everybody goes to Costco, and sometimes you see a tent set up by a third-party vendor, and they're trying to sell whatever. If their price is up there and it's too high, there's going to be no traffic. You're going to have to do something to get traffic. Their product is good. The price is too high. And they got a lower price to get traffic. To get traffic, they had to continue to beat on this S&P. Now, interesting thing happened, and I tweeted it right before 2 Central. Why 2 Central? Well, number one, you get the U.S. bond market essentially closes at 2 p.m. Central time. Always has. It's still open, but most of the liquidity drains from it after 2 Central. It's like the 3 p.m. Central time of the stock market close for people familiar with financial markets. So the bond market is charted here, correct? This is really interesting. This downside in the bond market is predictable, and I'll tell you and explain to you why. First of all, when you have fear that's driving this market, which we obviously have with the coronavirus, stocks go down to adjust for how bad is it. And remember, uncertainty is the economic growth killer. It's a stock market bull killer, at least temporarily. So when stocks go down in price, where does the money go? Doesn't go under your mattress. I often kid people and say, you know, I'd like to try to take $100 million and hide it in my mattress. Hedge funds and big hundreds of millions and billions of dollars can't do that, so they buy treasuries. You got to park the money somewhere. And U.S. treasuries historically have been a safe haven. You've often heard flight to quality. That's what that means. So stock prices go down because of fear, bond prices go up. So you see this higher trajectory in bond prices all day long to react to lower S&P prices, stock prices, right? Interesting thing happened. S&P in this area didn't just go down. This is the bonds now. They didn't just go down around 115 Central for about 20, 30 minutes. But they went down a lot. I'm going to show you that chart in a second. Did the bond prices go up? No, they didn't exceed this high of the session. They were going sideways. That's why this was predictable. For instance, if I show you now, this is an S&P chart. At 115, and we got to go back a few beats here. At 115 Central, you could see how they stepped all over this market all day, but including in here, right? There's about 115 Central. They were trading like 31.48, and they stepped on it all the way down to 20. There's like a 25-point sell-off in 15 minutes. Now, that's not a surprise on a volatile day like today and yesterday, but it is a significant move, correct? So you expect bond prices during that same 15 or 20-minute time period to at least be higher than they were before the S&P sold. They couldn't grab a bid. They couldn't go up into their close. That's why 2 o'clock became so pivotal, because you're showing a lack of strength in bonds, which could show a chance for strength to come back into stocks. You started to see that at 1:30 Central, and then you started to see that after 2 o'clock came and went, and we started or got closer to 2 o'clock as they caught a bid. Now, you'll get beat up trying to be perfect buying lows and trying to pick a bottom. You have to pick areas and say, when we exceed a certain area, and I'm using correlation, ancillaries, as a way to compare and contrast. So where you value the price of anything you buy or sell, cars, houses, plane tickets, You always compare and contrast. Why the heck wouldn't you do it when you trade S&P futures or crude oil futures or anything that has a price attached to it? If you don't, you have to. You're not a pro unless you do. So with the bond market not showing strength and the S&P showing a lot of weakness, you could predict that maybe they're ready to catch a bid. Does that get you long down in here? Maybe. But hopefully it keeps you from getting short in the hole. And short in the hole is just selling it literally in a hole and price rallies against you. You know, you miss this whole downside. And then finally, when you get short, it drives up. Understanding what the bond market was not doing in that 15, 20-minute period was invaluable to predict that indeed we could get this rally from 20 all the way up to 56. The only reason it did not continue, and this is really important to keep yourself in tune with the news, because news is driving this market, is because things change, especially when fear is the driver. At 14:06, which is 2:06 Central Time, is when we topped on this rally. You don't know it's a top at this point, even 10 minutes later. Right now, we're trading 20 points lower than these 49s right now. How do you know that this might not continue on the upside? Well, let me shrink this chart. Take a look at a news source that I have. You don't have to have this exact news source, but you got to keep yourself privy to what's going on and driving this market. At that exact time, 14:06, HHS Secretary Azar says the risk to public remains low, but reiterates we'll likely see more cases. It doesn't take much to spook a fragile market. And so, no coincidence. This headline hits the wires at the same time they top off here. If you're still super bullish right into this time, you're missing something. And you have to minimize what you miss in all markets, in all periods of volatility, or when markets get slow. It doesn't matter. When you're risking your own money and you're putting your idea, your opinion out there as a trade, I'm long, I'm short, you have to put yourself in a position to say, when are you wrong? When am I less bullish? And why am I supposed to be privy to things that are causing this market to do what it does? News is doing that. If you didn't know what the bond market was doing in that 20-minute time frame, you missed a good piece of information that's seen a 30-point rally out of the hole. If you weren't in front of news that hit the tape at just after 2 Central, you missed something. And the more you miss, the less money and opportunity you will be able to catch. So now let's just bring everything up to real time and say, okay, this is all great. And you could turn yourself from being bullish to bearish, back to bullish and everything else. Right now, they've not been able to find a decent retracement after they sold off on those comments, okay, from 56 all the way down to new session lows. They haven't been able to find a good retracement to spook shorts. In order to go up, you got to get the shorts mad, angry, scared. If they rally from here and they come down to here, that ain't much of a retracement. They rally, if you look at this high to this low, that's only about 50% of that sell-off. That's only about 50% of that sell-off. This is only 50% of that sell-off. These are things you could see real time. You don't have to go back on it. This is the move. This is only 50%. You need to get a jump out of the hole that takes back most of the last move lower in order to get shorts to have what I call the grapefruit eyes, cross-eyed. They're not mad, they're worried. When shorts look like this is the only time, and usually they have stupid looking hair and they got big ears and they look like babies, even they act like babies and look like babies. So the whole point is you can't try to be too perfect picking a bottom, but you have to put yourself around news when news is driving the market. And you have to know what's bullish or bearish when it's happening. And you have to say, I ain't going to pick a bottom. I'm not going to get in front of this train. When news came out here and actually pushed us lower, and there's been no reason to turn around just yet. Be patient. Don't try to be perfect. Look for areas. If you look for one particular price, you're trying to be perfect. If you're looking for an area of prices, no matter what you trade, now you're giving yourself a little room for error. You still got to manage your risk. You still got to know where you're getting out before you get in. You still got to know where your losses are going to lie. That's part of managing risk. But you're at least not getting so emotional by trying to be too perfect. Don't try to figure out how you could have bought it there and sold it there. It's not going to happen. You're going to get bloodied up. People who try to pick the bottom, they end up buying it here, buying it here, buying it again here, buying it again here. They think they have the bottom. They puke it all here. They lose a ton of money, and then it rallies. They're trying to be too perfect. So right now, as we've been talking, they reject a little bit out of the hole. Now, this isn't much of a move, 4 points from the low of the move right now, 17 3/4. And this is the S&P March contract. We only rally about 4 or 5 points out of the hole. That's nothing on a 140-point range day, right? What you have to see is, at this point, some of this move to get retraced to scare the heck out of who? Shorts. In order to rally, you got to have the shorts nervous. You've had nothing but longs nervous. Then you're also standing on guard for any news that might be bullish. Anticipate what could be bullish news. So if you hear it, you know how to react to it, and you're not surprised by it. If you were surprised and didn't know about that HHS secretary comment, you're not a trader. You're putting yourself on railroad tracks, and you got blinders on. Trains are buzzing by you. You're missing something. You got to open your eyes, you got to open your ears, and you got to be privy to what moves the market. 99.9% of my trading career would never be affected by what the HHS secretary would say. But because it's unique to what's driving the market, that what has this market on eggshells, more than eggshells, obviously comments by more people that would otherwise be irrelevant matter. No coincidence that just after 2, news drove this thing down. It hadn't been able to recover yet. Now, 15 area, the area could hold as a near-term bottom without trying to be perfect, only because, and I don't want to get lost in the weeds here, only because on a daily chart, if you look at a daily,
9 3/4.
Here's the bloodbath. Let's bring this down. Here's the bloodbath of the last couple of days, right? If you take a look at this, and you can't just make a living saying, oh, that looks like a consolidation box. I can make this a daily, remember. I can make money by taking the middle, and they should hold there, and they're going to rally like gangbusters. You can't be that perfect. But you can anticipate the fact that if it could jump a little bit, then look to buy a retracement because this low might be in. You got to put yourself in a position to, if you're wrong, you don't have to get destroyed and beat up. A lot of people are right and lose money, and there's nothing worse than that. And when they're wrong, they just get destroyed. You could put yourself in a position with good locations and missing a lot less important stuff. You can put yourself in a position to be wrong and actually make money because your locations are so good. Your ability to change your opinion is so good. And so it's really important to know what's important and then put yourself in a position not to miss it. Now, I grew up from the trading floor and then a professional electronic prop firm. April of 2000, 20 years ago, I was hired. That's the venue of professional day traders. I was around guys that had eyes and ears on stuff that mattered. And if you didn't know something, you had someone to ask. You had the right person to ask the right question to. That's what's missing in today's trading environment and industry. Yeah, there's a lot of information. Most of it's irrelevant. You know who you're getting it from. Maybe it makes sense. Maybe it doesn't. But it's general at times. And again, too much information. Just because it's out there and it's at your fingertips doesn't make it good. You got to put yourself around like-minded people who are talking things that make sense. It might not be the sexiest thing. Market correlations, I heard recently, has a big dropout rate when someone does, and not many people do this. A lot of people started doing it after, you could see my videos on market correlations from 8-9 years ago. But when people do market correlation webinars, there's a big dropout rate. It's because people don't, it doesn't appeal to them, but yet they're trying to value price. So the number one technique to value price doesn't appeal to them, even though they're trying to value price, which is what trading price is all about. Another thing about volatility is breakouts. Right now, this is starting to show a little bit, I don't want to say a bottom, but potential breakout above this yellow box I just drew. It's a little jagged, which means that's a high, that's a high, that's a high. But with breakouts, there should be shorts that have that look, that picture I just drew, that ridiculous look right now. And they're all going to chase this thing up. They're doing it as I speak right now. They're leaving this box. Buy stops are shorts covering losing positions. And right now, that's what they're looking like. It's not just people that are buying it. It's people that are chasing it, trying to buy it, not getting filled. Remember this if you don't remember anything on this video I'm doing. When you're short, what are you now? A buyer or a seller? You're a buyer because you have to get out of that short position. If there's a lot of shorts that look like this, in this area here, there's a lot of buyers trying to chase it. Another thing I want you to remember about an epiphany you could have with why charts do what they do and everything. Think of a house. The price of a house is affected by how many people might want to buy it. If there's 3 people that want to buy a house, only one person gets filled, right? Only one person going to buy this house. But the other 2 were instrumental in the direction of price, weren't they?
1 quarter.
Same thing with what just happened as I'm talking. And this is what this is obviously you guys know why it happened, which makes it more powerful than after the fact. There's no coincidence. It's not a good guess that they released through there. They had that 15 area as potential support, but they also had a breakout, and breakouts are the choice style in very volatile markets. Why would breakouts be the choice style in volatile markets? Because that's pretty much all markets are doing. Breaking out, up, down, wicked pullbacks, wicked bounces. All of a sudden, hey, this seems pretty bullish, Anthony. And then, you try to buy it and you get a little bit of a winner and wham, it comes right back in your face. So you got to know how to scale out. You got to know that you'll never go broke taking profits when you get it in volatile trades. You got to put yourself in a position to start scaling. You can't, if you're all in, all out, you'll have nice winners turn into nice losers, and there's nothing worse than that. There's nothing worse than having a nice winner turn into a scratch, which is a break even. You might not have lost any money, but you lost emotion, and you want to preserve emotional capital. So you see how this not only had the breakout above this box, but it also had now a nice bounce, taking back a lot of that selling. So if you look at the selling starting there and going to there, for instance, that took 100% of that selling back, right? It's taken back from here to here, 75%. That's a lot. Remember, a guy in a prop firm said, if the market is going to stay this weak, why did it retrace most of it? This is all shorter time frame stuff. You can't put yourself in a position not to bend. So for instance, right now, there could be some short-term selling that comes in right in here, shaking out all the people who bought it late up in here. All right? If it gets back through the middle here, they should take out the top at 32. This is now a consolidation box that's forming. The middle of it's important. Why is the middle of it important? Because that's the average of where people are long and short from. And that could be a whole nother webinar. So above 32 could be some more buy stops that get released, just the same dynamic that played down there in that circle. But what's important is right around the middle of this guy, right there. They can get there, they get more shorts to say, should I get out? Maybe I'll get out. Should I get out? Maybe I'll get out. Should I leave? Maybe I should leave. Then all of a sudden the exit's clogged up and they got to chase it up, chase it higher. And don't worry about my lines on a chart. That's, again, for another webinar. This analysis that I'm doing in a way now I do every day in what we call a trading room, right? Where people are listening to me and a couple other guys in our analysis of what's going on to give you more of a real-time effect and to miss less. My room's not open at 2 p.m. Central. But if it was, and that headline came out, guarantee you that people would not have been super bullish. They would not have been bullish, let alone super bullish. They would have started scratching their head, removing their horns, and looking at some downside. We couldn't have predicted this much downside from 2 o'clock down, but we could have predicted downside because number one, we rallied, and number two, we yes, we had a rubber band, and number two, we had the HHS Secretary Azar come out and say there still could be more cases. A week ago, if you would have said that, nah, it wouldn't have mattered. But after the carnage of the last 2 days in prices, every little thing matters a lot more than it did. Here's some of this dynamic playing out. As soon as you got through the middle of this box, you grabbed a bid, furthermore through 32 even. Who cares if it goes up another 7 points or 8 points or just gives you a 2 or 3 point head start? All you're looking for as a trader, no matter your time frame, is a head start. The definition of a good location is having a trade or investment go your way sooner rather than later. The faster it goes your way, the better the location. Give me a 2 or 3 point head start all the time, you could trade with your feet. Don't be one of those traders who, if it ain't a big winner, you ain't going to take it. There's a lot more that goes into making big winners or certain trades out of your analysis. Meaning you got to work your way up there. You want to make more money, trade bigger size. One of the things that's also important that through this volatility and talking with people and trying to help people as much as possible is generally people fail their strategies before their strategy is going to fail them. In other words, we screwed up. Just be simplistic. The way I walked everybody through this market, there was no pressure on me to be right because I could care less if I was wrong because I wouldn't have been wrong for long. People who followed me for any period of time know that. It's not about being right. It's how long you're wrong for. So when you listen to other people, don't listen to how often they're right or wrong or any of that stuff. It's how long do they marry an opinion that they don't give up and they're biased. Because I got news for you. If you're long from here, and 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 you're still long, and you're still long, and it finally rallied to here, you took a victory lap. I'd throw you out a window if we were close to one. You were way wrong before you were right. So trading is about how much you're right. It's about how quick you're able to admit that you're wrong and have some sort of progression that gets you there, that creates objectivity, that strips out emotion, that allows you to be around people that you contribute to and they contribute back, answers questions, simplistic answers to complex questions. Solutions are generally in the simple. It's politicians and experts that try to make it complicated to seem smart. But as a 20-year trader, I've been in the business 25 years in front of the screens. One thing I learned about trading is it's a no BS business. Your statement will tell you if you're right or wrong. Don't worry about the first thing it's going to tell you you're right or wrong is price. But forget about the BS. Just put yourself in a position to be okay with being wrong. It's called being secure. But again, going through this analysis, like, why did I think I didn't know when it would go up until I identified this as a box. So I couldn't have told you this information that we could break out above there until over here, you had to let this develop. All right. It did what it was supposed to do. Like I said earlier, once you get the first rally that takes away a lot of the selling, which is this retracement, well, then the market's transitioned up. It might transition back down, but you should know where that happens also. So we had a small retracement and then a re-rally. And you might say a small retracement right in here. What does that mean? So small retracement off of that pop. Now this should hold as support. If it doesn't, you start to question the continuation of this trend. And when I say has to stop here, not on the dime, but it's got to be close. It's getting close to being like, well, transition back to bearish. Doesn't mean when you're bearish, you got to be short and long when you're bullish. Don't think about that. It's hesitating and consolidating here like it was there. To me, it's transitioned, which means snuck through it and should have held it, should have bounced quicker, didn't, and that's why you're getting that. You read here because you know what happened here, and you're using information that happened prior as a way to say what should happen. If the market was going to continue up and away, it wouldn't have splattered through the 34 area. I didn't know 34 area at 9 o'clock this morning. I didn't even know it 20 minutes ago. I seen it by this consolidation here. Should stop it there. When it doesn't, you don't have to say it's bearish way down here. You could say it closer to where it didn't hold. So a couple things. Subscribe to this YouTube channel. I want to get over 1,000 so I could do these videos live. YouTube doesn't let you do it until you get over 1,000 subs. Come and subscribe to the Edge Trading Group Trading Room. You do it monthly, you'll get this kind of analysis day in, day out. And if it's something that doesn't help you, cancel after a month. It's 10 ticks, roughly. I mean, it's like people will risk tens of thousands of dollars, but you have to invest in people that make sense to you. Cost me a lot more money than trading education costs out there when I got hired at a prop firm, because we gave 50% of our profits up the first 3 years and about 25% after that. I always tell people I'm not bitter about that. The cost to success is never zero, and it's not even never cheap. But you want to put yourself in a position to do this when you're listening. There's people of all different experiences that listen to this video and that are in this business. Guys that have been successful making money and want to make more. Guys that have never done anything but lose money, but work hard, and everybody else in the middle, right? You're not going to do something that's challenging by a bunch of free YouTube videos. You also don't have to spend tens of thousands of dollars either in education, but you do have to put yourself around people that get yourself off an island, because the island is what everybody's going to be on. I'm going to draw an island. And by the way, am I trading this? Nobody's asking me that. The answer is no. I don't like trading the last hour, even on volatile sessions, and the day went well, and I don't want to end the day lower than where I'm at. I'll be more mad giving back money in the last hour than I would be happy adding. But either way, you get this market to be, so people see this green area. You guys will see this from videos, people that follow me in the past or now. Why do you think it's hesitating here? Not because of this green line only, but because of where the stop started. Remember where it got fast in there when I said it could break out? Is there any coincidence it stopped there? And this is in hindsight's 2020. Anybody's watched any of my videos, it's called the pattern is where the stop started. Buy stops came out here. Draw a line across. There's no coincidence that it grabbed a bit of a bounce. I'm going to leave you guys with this, and I know this went on into the close. I meant to do it for the last half hour, and we have. But edgetradinggroup.com is the website to come to. The trading room is a daily thing, but there's all kinds of education beyond that. There's order flow, education. And I'm not doing this webinar. I'm not doing this YouTube video to promote it, but I'm gonna, because people always ask me, where can I learn more? So I'm gonna kill two birds with one stone. Go on the website. Not only you get a daily room for a month, but you get all this order flow education. There's some profile education for guys who want to learn more about profile. There's all kinds of good stuff. And if, you got your value after a few weeks or a month, it's recurring, so you can cancel it. The point is, real-time analysis is everybody's weakness. Even if you're making money, we're always working on better location to adjust our size, to have more effortless trades. It's always our goal. Always trying to put ourselves around better people, to find some all-stars that we become one of, to keep us off that island, to put us in front of information, news, Big buyers, big sellers that we otherwise wouldn't have seen if we weren't around the right people or been trained to look at the right stuff. Understand how to manage risk. Understand that it's okay to get discouraged. It's not okay to stay discouraged. And let me end this as we go into the close. Fairly weak. I mean, this isn't this bounce. When this much of it got taken away, sure, it stopped here for this reason, but this is probably going to get in the last 15 minutes, right after this 3 o'clock central close. It's very pivotal, like the 2 o'clock bond close was. They might capitulate this thing in the last 15 minutes. So you got to be really careful if you're buying this thing in here. The cash markets close in 5 minutes, but the futures are open for another 15. And they're closed for 15. They reopen at 3:30 for an abbreviated open for 30 minutes. But right now, the Bears have just done a god-awful job at trying to hold on to a bounce. The Bulls, I should say. I said Bears. I think I said Bears. Bulls have done a god-awful chance holding on to these bounces. We're so dangerously close to the lows on a 100-point down day. Where's the futures actually, by the way? Down 100, almost exactly 100 S&P points. And then NASDAQ 250. And the Dow futures down 913. Last thing, it's a story I'm going to tell you into this close. And then I want you guys to work on coming to the website and doing what you got to do, but at least subscribe to this YouTube channel. And this isn't my story. This isn't my story. I heard it from TV, that show Hard Knocks, the special teams coach of the New York Jets like 10 years ago. Do a YouTube channel search of it. It's a great speech. He's special teams in football gives guys a chance to hang on and make a roster. Can't make any of the offense or defensive positions. You have a chance to hang on to an NFL roster by being a special teams player, right? But it's a dirty job, right? It's a dangerous job, and you got to work hard to get it. Now, he's a special team coach, and he says to these guys, he was in church, and he heard the pastor tell the story of the devil was having a going out of business sale. And he was selling all his greatest tools. Someone comes in, and they ask the devil, what's your greatest tool? He asks. He goes, well, what do you mean? What works the best? He asks the devil. The devil replies, discouragement. Because as soon as I get someone discouraged, all my other tools work. So this coach addresses his players. He says, I'm not looking to save your souls, but I am looking to save your playing careers. Because if you get discouraged a little bit, you won't run as fast, you won't work as hard, you won't come in early, and you'll be right. You won't make the team. And I think that's important, not to avoid discouragement. It's important to recognize the early stages of it, because that story's right. There's a devil out there. He gets you discouraged. Everything else goes down easier. We're human. We're supposed to get discouraged, but work on not staying discouraged. Rely and default on the simplicity of what could get you successful, what could keep you successful. And in this business has helped me greatly be successful in other relationships, because, and any husband in the world will attest to this, I'm good at being wrong. And when your wife knows you're good at admitting you're wrong, you fight less.
1 quarter.
Good luck, guys. Like I said, edgetradinggroup.com, YouTube, subscribe to the website. Get all the plethora of education. This just was an impromptu video I wanted to do. I can't do YouTube live videos because I don't have 1,000 subscribers. So pump them up. I've been in this business a long time. I just recently started putting out YouTube content and many videos. I've got a lot of videos from the past. You search my name, see a lot of stuff I've done. None of the techniques and concepts change, because valuing price since price was invented doesn't change. It's compare, contrast, and it's buyers and sellers. That's order flow. Everything else is too much information. Keep it simple. You know what would make me the most money right now as we're talking? The Fed coming in cutting rates. Now, they're not supposed to do that, But if they did, would know what to do. We get a short-term pop. So good luck. Manage your risk before you take it, especially when markets are volatile. Cut your size because you're going to have to you have no choice but to increase your risk when prices are flopping around like this. Things will settle down, but for the foreseeable future, you can't close 1,000-point back-to-back in the Dow and think that things are going to get calm right away. The carnage left over from this coronavirus is what the market's trading, not just the health effects. At some point, that hopefully peaks. It's what kind of economic contraction it's caused to China and then rippling through Europe and maybe the United States. That's more of a macro view of this. Good luck, guys. Thanks for watching. Hope to see you at another YouTube videos. Comment, all that stuff that these YouTube creators say. All that subscribe and comment and do all this other crazy stuff. But do yourself a favor, come to the website, check it out.